Welcome to Investors Insight, where today's topic is earnings versus geopolitical events. A lot going on, especially in the world right now and the markets. Before Ty gets to talking about how the market historically performs with geopolitical events, I want to talk about earnings. And so the market has a lot of headwinds and uncertainty right now with the conflict in Israel, questions about whether the Federal Reserve will raise rates again, potential government shutdown next month. But one bright spot is that a key driver of equity markets is corporate earnings. And third quarter earnings season started off strong last week with some big banks reporting better than expected earnings results. So let's take a look at where earnings are expected to come in. And so looking at this first chart, analysts expect S&P 500 companies to report back-to-back quarters of earnings growth, which is following an earnings recession seen earlier this year. And so as you can see in the chart, analysts are also calling for earnings to continue to grow next year, and it's seen in the light blue columns. And looking at this next chart here, we're also looking to see if profit margins improve for the second straight quarter. So as profit margins fell earlier in the year, we've seen many corporations improve efficiency ratios and pass higher costs on to a stronger consumer in recent months, which has been great. It's led to higher profits, which has been a nice surprise for corporations. And while stocks move on earnings reports, it's actually the profit margin surprises that really make companies' stocks move. And as you can see in the yellow columns, profit margins are expected to improve to the end of this year and into next year. That's a positive. So as earnings season kicks into gear this week and next, strong corporate earnings and profits can help the market get past all the current headwinds. And speaking of headwinds, Ty, there's a lot going on in the world. We always like to look at history and see how the market has historically performed with geopolitical events. Talk about that for a second.
Of course, we hate to talk about it. It feels like we just talked about it just a few years ago with the Russia-Ukraine situation. And of course, on a humanitarian level, our thoughts and prayers are out to, of course, everyone involved. But on a financial level of what that kind of means for us over here, in the U.S., I have a couple of charts here that show about how stocks usually take geopolitical events in stride or how they react to geopolitical events. So a lot of times, these events happen and people say, just sell, sell, sell. One of the interesting things here is that this was only the fifth time that the day a major event happened, the market was actually up. And so it was up 0.3%, nothing crazy, of course, but those previous four times where the market was up that day, the max drawdown is 1.5%. So on a market scope, it seems to have very little impact, especially with the way it performed on day one there. The average drawdown for all these kind of market shock events that they have here is 4.7%. So nothing crazy, not even a correction technically of 10%, just basically a 5% kind of pullback. And then, we have a chart here about showing how they react during recessionary times and non-recessionary times, which can be difficult to kind of translate today as we are not sure, are we going into recession? Have we already had a recession? They kind of change the definition on us sometimes. And so very interesting charts to just show that this is going on. Our market can, still react positively or at least, not be affected too much by it. The last chart I want to show is how this could affect oil prices here. So this chart shows some ups and downs. I would say definitely more ups where especially if you look at these specific Middle East events like the 1979 Iranian Revolution, 73 oil embargo. Of course, you have the U.S.-Iraq war, Iraq invades Kuwait here. All of these events, for the most part, resulted in higher oil prices. Now, it's not, for sure, but there's definitely more ups than downs. And so we will see how that affects the consumer over here if oil prices start to be elevated again. We saw a huge pop day one of the war.
Yeah, that's great information, Ty. So the next 2-3 weeks, it's going to be very important to see if the market can focus on what's hopefully good corporate earnings and kind of overpower all the with everything going on geopolitically overseas. So a lot going on in the next 2-3 weeks. It's going to be very important that corporate earnings come in strong here. So obviously, we're following that carefully. If you have any questions about anything we've discussed, please reach out, and we thank you for watching.